Hey everyone, this is Michael Ben-Ghiat from Lifetime Investor, and this is the Stock Picks weekend video for April 16th, 2022. As usual, we're going to review the current market environment first, and then we're going to go through our open positions and then the stocks on a ready and watch list. We're going to go through those. Here's our disclaimer. Just you can pause the video and watch this, read this. Basically, it's just saying that everything we talk about here is provided for educational and informational purposes only and should no way be considered investment advice. Okay, got that out of the way. So here we are. This is I'm shooting this on Saturday. We had a holiday yesterday, which was Friday. So as of Thursday, the overall environment is still red. We really just not seeing anything. It gets bullish, and then the same selling comes back in, failed breakouts. We've changed our strategy now to really back to shorter term swing trading. We were trying to see when it was looking more bullish so we could hold on for bigger positions, bigger gains. We're just seeing that there really aren't a lot of bigger gains that are appearing, and but we're really not getting any decent gains, not enough to really start taking profits to offset the risk that we're taking. And we're always trying to do at least a 2-to-1 reward to risk ratio. So if our average stop is 5%, we want to try to be holding on, trying to get taking profits 10% or above that. Ideally 3-to-1, which would be 15-to-1 or 15% gains. And we're just not really getting those. So we've been overall, we've been cutting our risk by moving our stops up. So we may have started off with a 5 or 6% stop. We've tried to move it up if possible to 2 or 3% without getting too close and getting stopped out. That's one way to reduce the risk. That's really the number one thing in stock trading is that you always have to be looking at the downside. The upside will take care of itself in a good market. But in a market like this, you really have to be more concerned about losing money than gaining money, because if you keep the downside in check, you'll be almost guaranteed that you'll be doing well when the market's doing well. But when the market's poor, you don't want to be taking losses and losses and losses and bigger and bigger. If you notice, we've been just getting smaller and smaller and not trading a lot, trying to get a position on. We have a little bit of profit. Sometimes we got stopped out, but we're not keep going. Now, we've had quite a bit of losers in a row, but if you look, this is over the last 4 months, and really not a lot of trades, and they just haven't been working, which is why we've been cutting our exposure. We recently, I think, got up to 40% or so. We've quickly cut it back down to 10 or so percent, just because it's not really working. So that's where we are. It's just not a good market. We have just very few sectors are working. Mostly it's oil and gas, some chemicals, some cyclicals. But even then, a lot of those charts are extended. It's just really not working all that well, and it's kind of random. You might have one stock, like we're in Shell Oil, which we'll talk about in a second. But and that's kind of just meandering a little bit. We're up 1.7%, but then two other ones, RPC Oil and Weatherford, both in that same sector, just took off. So unfortunately we weren't in those when we were in another one. That's how it goes. So let's go ahead and I'll move to the charts, and we'll start going through our positions. Okay, so let's start with Costco. This is our only long-term outperformer portfolio position. And you can see we bought it on the breakout. It had a nice little run, and of course had a correction, and it looks like it got support right at its 10-day moving average, which is this pink line here. A little hard to see. So it's a great sign. Really, the strongest stocks really get support at that 10-day. In fact, if you look back over here in the chart, you'll see that this whole run here just kind of slowly crept higher until finally, it made a big enough move that a little more selling came in. We had a little bigger correction, and then we did the same thing here. Just even this part here, it was just going up. It wasn't even going down to the 10-day. So this sometimes is a little bit of a sell signal when you get this much of a move, 1, 2, 3, 4, 5, almost 2 weeks, and we're not even touching the 10-day. This is where you start seeing, well, maybe it's time to take a little off the table. So we just started the move here. Came down and tested it, So looks pretty good. Earnings are in 40 days, so we still have plenty of time. Relative strength line is moving higher. The rating is good too. There's really nothing looks good in this in Costco. I mean, I'm a Costco member. It's been a great place to shop. Couple final things too here. We had this little extra kind of got a little on the upside, maybe too strong, but came back very orderly, low volume, and now we're kind of creeping our way back up. So this chart looks great. It's not doing anything wrong, so we will stick with that. But we'll probably, even though it's a long-term outperformer, in this market environment, if we're up 5.3% right now, we may take a little off the table if we get up to 10 again or so. It's just it's the tricky. That's the hard part is selling, but it's just not a great environment. And the fear is that we're heading lower on the Nasdaq. In our market trend advisory, we're now in 0% invested on the S&P as of Thursday. So it's likely that this will get dragged down with everything else if the selling gets worse. So that's where we are, but we'll see. It has to give us some kind of sell signals to take the profits. And one of them maybe if it just keeps going up and gets extended, we'll take a little bit off there. So we'll be watching that one. All right, let's take a look at Molina Healthcare, ticker MOH. This is we've had this for a while, and it's we're up. This is our best performer in the growth portfolio. We're up 2.13%. It just really hasn't been doing anything wrong, but it really just hasn't got anywhere. We bought the breakout. Had a nice tight trading before this breakout day. We just kind of it's just really forming looks like a base on a base or a flat base. The bottom of this base here, this little area here is the top of the previous cup with handle base. So you can just see it seems like we get up to around this 346, 345 level, and the sellers just come up here, but nothing. Look at the volume is just low. There's nothing. It's not doing anything wrong. Only thing we have to watch for is that we have an 11 days earnings. So we'll see. Hopefully this can maybe rally a bit in anticipation of earnings, and we could hold on to it through the earnings season, but we'll see. Just a few more fundamental things here. Over here on the left, we have nice acceleration in earnings. These are annual earnings. Looks good. Sales have been very strong for the last 4 quarters, over 40%. That's for a managed healthcare service, that's really phenomenal. And it looks like, earnings are just starting to accelerate quite a bit. In 2020, we were $10.50, and we're closing in on 20 estimate for 2013. That's doubling its earnings in just 4 years. So something good's going on with this company. So it looks good. We will hopefully get a little more profit in this before earnings. Next one is Allscripts, ticker MDRX. It's a similar chart. We're up. We're almost flat on this, up 0.25%. But same thing. It's just it's breaking out. I don't have the breakout spots on these charts marked, but I think we were getting in right around here. We had a couple reversals. We might have even got in this day. I don't have the days in front of me here. But it's just been kind of meandering, but low volume, which is actually very constructive because it's showing that we're here up at new highs. Let's take a look at the weekly chart. Let's go to the monthly. Okay, so we're actually the highest price, at least on this chart, for almost 20 years. So that's a good sign. Let's go back to the weekly. Nice relative strength heading up. Looks good on the weekly. And let's go to the daily. So you can see what's happened is that we kind of broke out, and we were getting a lot of, right here was where all the selling was. Let's see if I can actually draw a line here. Let me help. Okay, so there we go. So you can see when we were in this kind of a base, it was kind of an odd looking base. We would come up here and then we were hitting, it got about 22, and the sellers would come in and would come down, and it just kind of kept creeping up there. Managed above this day, came down. I think we were in on that day again. Came down. Just the buyers just couldn't push past this, and the sellers were basically lurking around 22. Then it kind of changed. You can see it got even tighter. And look at this trading right below that high, and right here the volume was super low. It just there was not a lot of buyers left. So we were burning off, whatever sellers were here decided to, either they sold, even though there wasn't a lot of shares being sold here. And we finally broke out, and now we're living right above here in all-time highs. And again, volume's low, so there's not a lot of sellers lurking here, which is a really good sign. So what we could potentially do, if it was a better market, is we would actually buy right above it breaks out of this little consolidation, which is around $23. So we would add to our position here, and we'd probably add less shares. You never want to do the inverted curve. You don't want to buy 1,000 shares here, and then you buy 2,000 when it goes higher. Your average cost gets high, and you're trading incorrectly. So maybe if you bought 1,000 here, you would add 500 here, or even 300, something like that, or even 100. Just add a little bit more, depending how much you had in the first place. But we're just not in a strong market. But this is acting well. I mean, you have to remember. Let me show you I'll just pull up one. I always think of PayPal. So here's here's a lot of tech stocks. The other direction. The relative strength is 5, and here we are back at Allscripts. Relative strength is 95. We're almost at all-time highs. PayPal and many of these stocks are off 50, 60% or more. So just as we're going higher, the sellers are just not appearing here to knock this thing down. So we love the fact in a great market, if this market really turned super powerful, these stocks like this one and the ones we try to buy with high relative strength are the first that potentially can break out and become the leaders of the next bull market, because they're already showing that you can actually see the S&P. This is this black line here. And you can see we've been correcting down here, but look what this stock's doing. It's actually holding and actually slightly going up. That's why we're getting the relative strength lines increasing, because the S&P is going down. So these are the things we're always looking for, these kind of stocks. And in a great market or the end of a bear market, when you see these are the ones you want to pile into, because they are many times the first ones that break out. And whenever the market goes back into a confirmed uptrend out of a long bear market, those first ones are the first ones out of the gate, and those are the ones you want to be in. We're not really in that situation yet, but this is what we always look for. Okay, let's look at the last one in our portfolio, and that's Shell. Shell's it broke out of this flat base. And you can see we kind of, almost like a little cup too. It came down, came up, and then it formed a little handle here. And again, the trading was a little bit lower, below average volume. That's this red line here. And then finally broke out and just kind of creeping higher. Of course, we love it when they just blast off, but this wasn't one of ours that did that. So he's not doing anything wrong. Let's go to a weekly chart. We're coming back up to, let's see if I can draw. Oops, sorry, what happened there? Give me 1 second. Redraw that. No, we're still a ways up to the bottom of this correction. Yeah, we're getting just to the bottom of where the sellers were down here before they really got plunged. But after this much time, 2 years, this supply, most of these sellers just got out. They took their losses and moved on. So we're back far enough that it's not so much something to be concerned about. So, but it's looking pretty good. We have here 1, 2, 3, 4, 5, 6 weeks in a row. That's a nice sign coming up into new highs. Okay, let's take a look now at not a lot of stocks on our ready list, but let's go ahead and look. The first one is Devon Energy. If you've been noticing, the energy stocks have been the ones that we're getting into. Relative strength of 98, and our buy zone was 62.90. So we were right at breaking above this here. Sorry, I'm a little bit low. Actually, I can't move the let's see, 62.90. Well, yeah, it's right around, we're close. So my line's pretty close, but we're trying to see, we're breaking above this. We broke above it, and it's viable here. Great relative strength. Earnings look good. We're getting very strong earnings and sales last 3 quarters. Margins are expanding. It's looking good. Earnings are 16 days, so if you were to get into this, it's looking good. We have another in our portfolio. We have Shell, so we're not buying any more energies just because we're keeping our exposure light. As you've seen, we're down to, it's just they're not acting all that well, but this is viable for anyone else. Shell is also on this list, so we'll skip that. We have Brown and Company. It's an insurance company. This is on both our long-term outperformer list. In fact, it's the only one on that, and on our growth stock ready list. It broke out, and it's just been coming down. It's testing its 21-day again. Earnings were 9 days. Again, this has been a nice orderly decline, even though we've had 1, 2, 3, 4, 5 down days in a row. It's been not bad. You can see the volume's low. It's been orderly. This is something that some people do. You can look at it. You can buy here on a turn back up from this 21-day moving average, and then if you wanted to even have a really quick trade, you'd buy it there, and then you'd maybe, or even right here at the 21. We don't generally like to do that. We like to always buy strength coming off of it, especially if it can break above this high of 72.38. And then you would put your stop either right below one of these lows here. So you have probably a 2% risk. And that's one way to do it. We might put this trade on for that. But again, we're in a poor market. We don't really want more exposure. But this is one way to trade this, is to buy it breaking out really above about 72.40. You can pick it up, and then your stop would be down about 70.90. So it's a pretty close trade there. Next one is Raytheon, RTX. And this one, our buy zone was 103.60. So a little above, let's see if I can go to it on here. Yeah, we're right above over here. So we've just broken out. The relative strength line is nice and strong here. That's looking good. Earnings in 10 days. We are in earnings season, so something you have to be careful about, but we're still far enough away. This could make a nice move, enough to give you some cushion going into earnings. But overall, company looks good, strong earnings, pretty good sales. Let's go to a weekly. We have the RS blue dot. That's actually changed. I'll change it on our charts. So that's showing that we're making a new high while the stock was in the base. Relative strength is making a new high while it's in the base before the price. So it's actually very bullish. So it's something that Raytheon is looking good. So on our watch list, we just have a few companies. Let's go through those. First one is PDC Energy, and that's PDCE ticker. Another RS blue dot. We like to see those. And this one it tried to break out and close just below the buy zone, which is at 78.14. So it's looking good, strong earnings and sales. We really jumped up from 2021 to 2022, almost double. So we're industry group 10 out of 197. This is looking good. Again, we will probably not buy any more energy unless we start really seeing a lot more nice breakouts. But we're getting just these kind of action. It's not really going anywhere. And earnings are in 19 days, so it would give a little bit time to get a position to hold. General Dynamics, like Raytheon, we're in the aerospace defense sector, which is industry group 31, which is good. Here we've kind of gotten really tight trading on low volume, which is a good sign. So we're looking to get this at 243. 245.90, which is right above this area here. Yeah, right above there. So that looks pretty good. Earnings, again, they're all coming up in about 11, 10 days. So something to be keep keep in mind. Let's look at Kforce. This has been on our list for a while. Looks similar to General Dynamics. We're trying to break above this little consolidation here. Ideally, if it was a really good breakout, it would clear all of this. So we would break out and close, above 76.28. Higher the better. That would be a really great breakout. The relative strength's a little low on this, just because it's been kind of making this long consolidation base for a while. But looks pretty good. It's a little on the low side of the volume, so it's not something you would put big giant positions on. But it does have pretty decent earnings and sales. We're kind of getting to the B list here. The lower the relative strength in this kind of market, the worse off the companies are in terms of our buys. AECOM Technology, Construction Management Planning Services. This one, again, we're down to RS of 89, though it is pointing up. It's been just a choppy trader, so we're still watching it. We'd like to see it come back up to these highs. You can see where it tried to get above 78, 78, 70, 80, even up to 79, and the sellers just kicked the deck down. So we'd love to see it come right back up to there, trade real tightly, like we've been seeing. We're always looking for those tight trading things, and then try to break out. And that would also increase its relative strength if it could do that. And so the last one is Arch Capital, ticker ACGL. This actually had a pretty nice move on Thursday. Tried to break out a nice volume too. You look at this volume here. So this one's actually looking pretty good. So that's just under the buy range, which is 49.15 right there. So we just closed under that. We have a little after hours. Looks like we would be there, but this doesn't always translate into real action in the morning when the market opens. So that's it. We just this is another insurance company. So you're sort of seeing a little theme here. We've seen a couple of insurance companies, a bunch of oil and gas companies, and a couple of aerospace defense, which would make sense considering what's going on in Russia-Ukraine. And that's about it. It's just we're not a lot of great charts. A few that are, we've sort of pointed them out, and we'll be back next week. That's it for this week, and happy trading. Okay, thanks. Bye-bye.